Good afternoon, everyone. Well, good afternoon from London, and good morning, good evening, wherever you are in the world. It's Washington, New York are sort of getting into work this morning, and what a first day that was, eh? I'm sure you all saw the headlines. I've got nothing really to add other than he is a character. Love him or loathe him. He creates volatility, and it's volatility that we as traders live and die by. So I hope you're all well. I hope you've benefited from that. I've just I put the 10-minute. Let me just make myself a wee bit smaller. We're on Instagram today, so the format's a little bit different. Let me see if I can make the chart any bigger. It doesn't make it any bigger. It makes me a bit smaller. But let's just get rid of. Let's go to full screen. Hopefully you can see it all, even on the Instagram setup we got here. What a volatility we had yesterday. So we got stopped out. We were long the dollar against the Kiwi, against the CAD, and I think cable, we had a long trade as well. All three of those got whacked, stopped out yesterday. On the rhetoric before the inauguration took place, that perhaps the tariffs weren't going to be on, or there weren't actually going to be any announcements on day one. There was some chatter that wasn't going to happen, and we went down. Dollar weakened, as you can see. Sorry, unprecedentedly. There we are. That's that 10-minute chart. So we got sucked out on those those long dollar trades, and then later in the day, he was sat at his desk. Did you see him signing his all his little books? He was signing away like some would say like a madman, like a megalomaniac, but that's not for me to comment on. And yeah, he talked about tariffs coming in on the 1st of February for Mexico and Canada, his two neighbors, north and south. And dollar reversed instantly. We've held that gain basically. So anyway. Doesn't matter, does it? That's part of trade. We were stopped out, we've taken out. And dollar CAD currently at 144.28. Obviously, getting a bit more serious. The economic data today, the key is the Canadian CPI data, excuse me, coming out. We've had some jobs data from the UK earlier this morning. And we've got CPI from Canada in about 7 or 8 minutes. And again, he's talked about Canada being the 51st state, hasn't he? So, but yeah, very, very volatile across all the dollar crosses. So it's the cable trade as well. Similar 10-minute chart, up and down yesterday. Sterling spiking all the way to 123.40 before we come all back down. And where are we now? 122.57 for cable. Euro, similar obviously moves here on these 10-minute charts, 103.64, so we're back under 104, having spiked to 104.40 zone. Yesterday on the tariff talk, tariffs obviously definitely still on the agenda, which is when, wasn't it? So anyway, let's go back to CAD because that's going to be the one that we see moving. We'll get rid of those. I should leave those on because I'm just moving them around when we next get a dollar CAD trade. So if I just move all these together, you see we had a losing trade, but saves me having to put them in. Anyway, 145 is still back on the table, you could argue, and it remains. Again, if we go to the daily time frame, you can see what a huge down day we had yesterday, but we're back up today, but still engulfing candle pattern on that one. If you can see that at these highs, so we're still, pre actual inauguration day, pivot day, we're still congesting at high. We're still sideways action at high above 143. So this is still dollar positive. This dollar loonie, it's positive for the US dollar still to the upside. We'll see how this pans out on the big actual announcement day, yes or non-announcement day yesterday. So anyway, let's just go back to the I'd say that was 5-minute chart on the data that's coming out currently. We're sort of ticked down here 10 minutes before the data comes out. So yeah, I'm not going to repeat all the news from yesterday, but I'm talking about potentially 100 executive orders. There was stacks of them, wasn't it, covering everything from immigration to pulling the US out of the World Health Organization, pulling out of the Paris Climate Change Agreement, clamping down on illegal immigrants. He likes immigrants. He says he likes legal immigrants. Don't we all? Bringing jobs and skills, and it's really the illegal immigrants that's got completely out of control, according to Trump, and that's really what he's looking to clamp down on. So yesterday, put it in your book, 20th of January 2025, Trump 2 kicked off, and the same day we had Davos opening up. Many of his supporters, particularly on the right wing of politics, see Davos is a big talking shop of globalists, lefties, and nothing to get too excited about. But again, it wouldn't surprise me if he showed his face later in the week, but it's obviously very unlikely. But anyway, part of what's going on yesterday. So this morning, numbers were a bit better out of the UK. We had the claimant count was much less than expected. Earnings still holding up quite strongly, adding to this ticking up with inflation in the UK, but the unemployment rate ticked up. So not great news, but relatively in line with the expectations. Better news out of Germany. The ZEW was more in line with expectations, and it wasn't as bad as negative as expected. Still very negative. But the current situation. Sorry, that was the current situation. The sentiment remains woeful in Germany, and there's no particular surprise there. So what's the sentiment was better? Well, EU wide is actually widened. So the main driver, the industrial heartland of Germany, still continues to lag very, very significantly. Still Europe's biggest economy, but still very much under pressure. The peripheral areas, particularly areas in Spain, are doing much better, and since the sentiments ticked up for January a bit better than expected, as that euro ticked up. So 3 minutes to the CPI data from Canada. The data out of Canada again is being overshadowed really by the political situation. Obviously, Trudeau having to quit as Prime Minister and leader of the Liberal Party, and elections coming. Elections around the corner, but who will lead the Liberals? It looks like the country's swinging away from his Liberal coalition. So that could undermine sentiment as we go forward and tie the hands potentially of anything the Bank of Canada may want to do. But obviously, it's all really eyes south of the border on the Fed about how many rate cuts are going to continue out of there. So how much the data will move today, or this pair will move today, based on the fundamentals, you could obviously really question again. Remember what happened yesterday. So currently, currently we've been back and we're holding. Let's just go. I'm just going back to the hourly chart. So technically, for what it's worth at the moment, the 144.15 area is the key intraday 50 and 20 hour moving average, taking the volatility of yesterday out. So we're still biased to the upside. So that's a big support area, 144.15. Let's just put that in because it might not come out as the data comes out, but that's a big support area. If that holds, we may see a move back to the upside as the data comes out in the next couple of minutes. So let's just go back down to the 4 hour. So we're back to where we were. We're still biased to the upside on the higher time frames. When we look at the 4 hour, you see they're chopping out, so we're still to the upside. So if we just go back to the 5 minute chart, we've moved down, haven't we? So may see some, if we get to test this, we may see some buys down here at 144.14. So you may want to put pending order down here and see if that bounces off as we're moving. We've been moved down ahead of the data coming out. Now then, my calendar doesn't update, does it? I'll have to refresh it, but hopefully it'll just keep my index changes. I'll change it quickly to Canada. We'll see what happens. So we'll go through the opening trades. We had a trade from last week. We got 30 pips on the CAD yen short this morning. So here we go. We're moving down ahead of the data, so we could see some buying here. So we see I haven't got a pending order in, but I would have had a pending order around about here today on this short term. So there we go. We've gone through the 144. So look what the calendar actually looks like. It's not update. It doesn't update automatically, does it? I'm not a great fan of this calendar. Actually, those of you that have watched me on here before, where? Wednesday. That's Wednesday. It's Tuesday. You're forward. There we are. So headline. So remember the Canadians. They come out with the common, the trimmed, and the coarse, and the median, the trimmed, and the coarse. So they get this sort of average reading. So the common is coming at 2%, a tick higher than expected at 1.9%. That's the least significant. The most significant is this core number, which is more negative than expected, and the core headline is hotter as well, 1.8% compared to 1.6 on an annualized basis for Canadian inflation. The monthly number has come in more negative than expected. So weakness in sales, in prices in December in Canada. The headline is coming not as negative as possible. So again, it's weakness in prices in Canada year on year. Headline 1.8%. And median 2.4, trim 2.5. So that gives us an average of around about, what's that, 6 and 5, 11, 5.5, isn't it? 2.5.5. So still, it's not stagflation, a deflation as many are talking about. We're getting to those levels. So we could expect the CAD to perhaps improve on that, the Loonie improve on that. So there, indeed, we did have some buying. So if you, there's that 20-hour and 50-hour big. Remember when they're together? It's not double the thickness, but it's significant. So there's that hourly time frame held, and we bounced back. So 144.15, 144.33. So 15 pips. Bounce up. I'd be in and out of that. Thanks very much. Trading that actual news, but let's see how it settles. We're only a couple of minutes in, but that looks like there's certainly some buyers at that key hourly level. So it's what we were looking at. Just I was talking about before. There we are. You can see that quite nicely there, can't you? The 50-hour and 20-hour, 21 EMA. This is the 50 simple moving average. This is the red line is the 21 exponential moving average, and a coalescing of them is always quite significant. And we're back to the upside for dollar CAD in the higher time frames following the reversal yesterday. So 144.15 proved a buying opportunity here as the data come out. So I hope some of you got some of that as the news broke. It's still opportunity, can obviously reverse as well. After the news is settled in, but it's biased to the upside, so we're looking to perhaps add to that if we move higher. Interestingly, 144.50 obviously is the next resistance to the upside. So if we you see these, so that's the 5 and the 9 moving average, but the level where we found hourly resistance yesterday after all the hoo-ha was around about 144.50. So watch that later on in the day if we have another upside target. So 5-minute trade is still good to go long here as this 5-minute candle confirms. Actually, we could do the 2-minute one because we can trade on 2 minutes out. So there we go. There's a 2-minute nice one. So we're down. Already got in here at 13.32 on the higher time frames as it's moved down. There we are. As we moved into that hourly support, buying here, and we're good to go. We've got in here. After the data, our 2-minute limit 144.30. Given the spread, see the spread there, it's nice and tight, so we're good to go, and we're in the money. Dollar CAD, so dollar CAD weakening on that inflation data. Let me just go back to show the calendar if you just joined us. There we are. Canadian inflation coming in a bit spikier than expected. Probably the headline there is that common number at back to the 2% level for the year. That's a a big psychological area. But the key ones are these this headline, the median, and the trim. So we do the average of these, and it's the headline at 2.4 for the median number there. So yeah, still signs of inflation in the Canadian economy. It's not going away completely, but still relatively positive, and pressure perhaps on the Canadian dollar on the back of that. And that's what we're seeing here in our 2-minute chart. So our executed order there at 144.31, and again that's another 10 pips on that. So the upside for dollar CAD at the moment. So just okay, there we go. This strategy here on the 2-minute is about to go long again. Oh, it has gone long again here. Again, so if you'd waited for the strategy to go, we're long currently up from 144.40 here on the 2-minute chart. The buy area, the pending order we'd have had down here would have been filled at 144.15 at that hourly resistance level. So we're good to go today on that trade and that announcement from the Canadians. Let's just have a look through everything else. We've got a similar, obviously, hoo-ha on all the other crosses based on what Trump was saying with regard to tariffs yesterday. So 22.60 for cable and euro 103.70 at the moment. Let's just go through. Let's go back to gold. I know a lot of your big gold traders. Hope you've had a chance to have a look at the interviews we did with Francis and Livingston yesterday. We've put it up on our social media platforms. If you haven't seen them, have a look at them. Guys talking a lot of sense, funded traders, their experience with us, with trading in general, and with prop trade as well. So gold, let me just go back to the higher time frame. So gold yesterday had a bit of a quiet day. Look at that. That's the Monday, holding its gains. Not really anything too exciting. You couldn't see any Trump volatility in the gold market yesterday. So we're up again today. We're holding 2,700, and the long trade that was initially initiated here on the 2nd of January, that's continuing to fold through, and here we are 21st of January, and we're still trending higher, and all nicely aligned. And just stay on your saddle, add to your position here on the break of 2,700, strong break. This was this triple high potential warning area. We had a minor down day on Thursday, on Friday into close, but we did. The key thing was we held the 2,700 level. That's a big round number again. Up day yesterday, less volatile for gold than many of the other assets on Trump inauguration day, and a stronger follow through so far today. Just other commodities. The other key commodity, energy commodity that's moving around is the oil market. Oil market continues to unwind quite significantly. You talked about energy yesterday. So as we said yesterday, our long trade that we'd been waiting for here with these support areas as we broke out. We added to our position here with the big break over 75, and then got reversed out as this came back down in the last few days. So couldn't quite get to $80 a barrel for US oil, but certainly extended limit down to certainly test 75. That looks like that's on the cards with this talk about increasing production in the US. More barrels coming to the market. Yeah, We'll see. We'll see if the sort of Canada US pipeline gets restarted. Remember, Biden stopped all that. See if that comes back to the fore. One would expect it to come onto the agenda. It hasn't actually been spoken about publicly yet. But fourth day down for the oil market, having rallied to $80. The successful exchange of prisoners in between Israel and Hamas helps to ease worries on that. But $75 next target downside for US oil, having had a good run up, but big support coming there as well. So we got the psychological 75 and the 21 at 74.70 currently. Indices with the other positions we've quite heavily, I mean, we're probably fully loaded now in there. So let's just run through these. The US 30, this is our entry from the 15th. We took profits here on Friday as we went to 45,003 something. I can't remember which it was. I marked all the charts up probably, but I'll be looking to pull this stop loss up to at least the entry level. Excuse me. Later on today. Lots of volatility again. This is yesterday. That's when I checked today. Lots of volatility yesterday. This is today's volatile session as well, on the back of the tariff talk from Mrs. Trump and his supporters. In Europe, if you notice there, the RSI here is just sitting around 59. In Europe, the DAX and the FTSE trades that we've had open, still very much overbought, but so we're still hanging on to them. Again, another one. Target was reached the second day after we opened the position on the 16th. We followed through, and our stop loss now is above our target, so we're very much in the money there. Again, we dragged that one up, but again, volatile session today. But be careful. This is looking, as we said, it is overbought. It looks like we may be stalling at 85.35. We got to 85.35 again yesterday. We came, 85.50. Looks like that might be the top end. I may be closing that out. Completely not get too greedy, but at the moment, don't panic. Don't get drag the stop loss. I may drag the stop loss up a bit more, but this is all-time highs for the FTSE 100. Similar, so that's significantly in the overbought area. Similarly with the DAX, similar move. This is a day later, wasn't it? It's the 16th, not the 15th. So entry stop loss is at entry now. We've got to target one. The second day again, 17th, and again I might sort of pull up the stop loss, see how we finish today. Less volatile the DAX than the FTSE so far today, so but again edging higher quite nicely in the money. As far as the US markets are concerned, Nasdaq was a later opening. Remember we said yesterday it had triggered, but I was fully exposed to the stock market. I didn't want any more risk on the pipe. So once we closed some of our first targets on both the S&P 500 and the Dow, the US 30, we reopened a full position here on it's the wrong chart. What am I talking about? I want the Nasdaq. Where's the Nasdaq one? This one, sorry. We opened a full position here on Friday here on the Nasdaq into close. So we got in at the top of the market, and our stop loss is still down there because we've only just opened it. That was a volatility from yesterday and today. But interestingly, again, you can see how the here on the daily time, you see how the 20 and the 50 both coalescing again. So we may be looking to drag my stop loss up later on that one, but we're still long on that one. And we did, I don't know if we set a target level, have we? No, we haven't actually set a target level for the Nasdaq 100. Well, but more importantly, we've got a stop loss, so we know how much we're going to lose. But again, look at how the Nasdaq 100, as far as the RSI is concerned, we're still relatively neutral at 56. Well, it's neutral zone 56, 51. 56, I should say, around about the 57 level. So we'll see how that goes back. Remember, we're in earnings season is in full flow. We've got all those, leaders of industry out in, if they're not in Washington, they're out in Davos. The tech leaders, particularly obviously the Nasdaq 100, many of them very, very much unsure in Washington yesterday. Yeah, that's bid. We may be looking to drag the stop loss up, but don't get too quick. Don't act too quickly. So the volatility we saw yesterday and today here. Remember, obviously the cash markets were closed yesterday, so this is a lot of the derivative market. So we're about to open in 45 minutes before the cash market opens still. So see how those markets perform when they come back after the long Martin Luther King weekend holiday, and obviously the ups and downs of the inauguration yesterday. Remember, the small stocks, the Russell 2000 was particularly badly hit. Sorry, I'm just looking down. Any no, still nothing new about I was looking at futures, what we might expect on open in 45 minutes. So Nasdaq still up. And have we done them all? 1, 2, 3. Did we do the Dow? We did the Dow, didn't we? S&P. Similarly, but S&P hit its first target just shy of that 6,000 level on Friday, because we got in the day before again, or a couple of days before, wasn't it? The 14th of the S&P. And again, stop losses at entry now, and again, see the volatility today, see how that goes, see if we're going to still to move up. But 6,100 is the upside target, an all-time high on the S&P 500. And if the rest of the earnings season is as strong as some of the banks were last week, we could see some good moves. But we are richly, richly valued in the stock market. That's been a lot of the stories around the press and around analysts about how high can this go. But at the moment, we're still, and again, on the wider time basis, we're not consolidating at highs anymore. As you can see here, it was quite a significant shakeout, but it's still only 5 or 6% shakeout, which is healthy. And again, technically, we're over the 50-day moving average, but it's out of alignment. It's above the 20, so they're a bit messy. Here they've come back into more of an alignment on the shorter time frame, with the 20s now under the 5 and the 9, my 5 and my 9. So we're back up from that strong move we saw on Friday. So 6,000 is fundamentally a psychological area and a resistance area. So have we got any more legs to get to 6,100 again? That's what we're looking at, but still in the money on the S&P 500 trade, and see how earnings season supports this wide stock market. So we're still long with all our index trades, and we're in the money. I think I showed you yesterday the crypto. We got to target from Tuesday's entry. Was it Tuesday? Yeah, the 14th. I dragged my stop loss up, and we were taken out on over the weekend actually at around about 104,000, I think it was. But yeah, hugely volatile day yesterday. Obviously, we had the Trump coin, the Melania coin, making more and more money. People investing madly. But we were down yesterday. Basically, I ended flat for the day, and we're actually back up again today. I've just noticed that we were in the red earlier, but we're back up. We've got the hourly time frame here. We can see we are actually sort of back up for the day. Yeah, so we were down earlier, and we've turned around, and again over its 50-hour moving average in this last hour or so. So Bitcoin back in the saddle at 104,700 currently. What else have we got open? Last night we had we were long Euro Swiss and long Kiwi Swiss, so we're short Swiss on those two crosses. So it's only two, it's not a massive exposure. And the CAD yen short from last week, I don't know if you're still in that. That was only a 30 pip target, but that hit target, and I closed that one out earlier. Let's have a look at those crosses for you as well. So first one was CAD yen from I can't remember when we this on? CAD was. It was. Oh, that's right. Yes, that's right. It was on Thursday. It's big down. We didn't actually get filled till then. It went against us for 2 days. Our stop loss was wasn't up there. I don't know what that's doing there, but our stop loss is up here, just above the 20 and the 50 day. Looked like we were going to get stopped out yesterday. It didn't, and then we've reversed again to our target, which was 144, I think, wasn't it? Where's my Discord group? Sorry, it's just share. Yeah, there we are. CAD short 107.44. There we are. That was from the 16th end of day trade. So from the 16th. So that's that 104. Where's my charts gone? There we are. So that was 104.44. So that was earlier today. It went to 104.37. I think as low as. I don't know why I haven't put the targets on there, but that was CAD yen from last week. So that's 30 pips to the good. So that's all closed out. I've told you about the getting stopped out on all the open long dollar positions, even though we're back to long dollar. And Euro Swiss and Kiwi Swiss, I think they've currently gone against us, but it's an end of day trade, so I'm not too worried about it. So let's have a look at them. I don't know if I'll mark them up on here actually, guys. Euro Swiss was where were we? There we are. Take profits. I have marked this, or I think I had. So that's our target. We're looking for about again 30 pips on to the upside. Stop losses down here from yesterday. That's Euro Swiss. That's out the money, although it's a green day today. Bizarrely, I don't know what that's. So that one's out of the money currently, but we're still open. And the other one was Kiwi Swiss. Kiwi Swiss. I'll stick it in here. Swissy. I know the spreads can be wide on these crosses, guys, but don't be if your system is still with you. So that was a lot. It's this one. I knew I hadn't marked one of them up. So this one's long from last night. Big positive candle yesterday. Nice break away from this 20p flat 20p moving average, but we ran to the 50. So that's big resistance. We've ran into it again today. But again, I think I was looking about 30 pips on that one. I can't remember if I actually put a number on it. Stop loss 51.02. So let me just put that on there. Well, so I've got that there. 51.02. What might have it's down here somewhere, wasn't it? Sorry, just bear with me a second while I mark this up. So it's when I come back, I know it's here coordinates. So it's 51.02 is where the stop loss is on my other side. So it's a stop loss from Jan 20 on an end of day basis. Okay. And I'd have been looking for about 30 pips. I think. What was that? 50 what? What price did it say it was filled at? Sorry, 51.63. Yeah, so we're looking for 52 basically, I think, aren't we? 51. Oh dear, maybe we got right at the top here, didn't we? 51.63. Is that the right? That's 51. It says 51.60. Our target's 51.63. Sorry, 51.63 is the target. You fool. Which is why 51. Oh, that's what that yellow line is. That is the target. 51. Why is that? Oh, that's not what. I don't know why that's not my. Let me just edit this. Because that's. I know I'd put them in as rare. So 51. Put it in. So it's in there. Sorry, I'm hesitating because that line's in there from somewhere, some time before. So let me just make sure this. Mark this. So this is T1 from 21 51. That's it. Was 51.63. 51.63. Okay, so that's yeah, that's interesting. And that line, there we are. That line's obviously been in when I've been looking at this chart. It might be when I was looking at this chart, this support area here on the end. See how that has been a big support. Sorry, a resistance to the down trend here. Bit of a pivot area, and then a resistance to go back up here in December. So it was support here in October, beginning of November, resistance back in the beginning of middle of December, and now it's our target to the upside again, another resistance. If indeed we can actually hold and breach this 50-day moving average is actually quite key, which we haven't to. But you know, anyway, my system triggered, so the position's on, but that's not looking too clever, to be honest. When I look at it manually, you know, that 50-day moving average has held really quite significantly since October. So yeah, I have to monitor that one a bit more closely. That might be getting stopped out. As I say, we're down today, so the entry was there, 51. On that, let's just put that in as well while we're here. On an end of day basis, it was there yesterday, roundabout. Again, entry. Check if that was the actual number. So entry 21. If it was actually filled then. Anyway, you get the point. So yes, so we've got Kiwi Swiss, Euro Swiss, both long, open, and those 4, 5 text 5 now index positions, but some of them are obviously only 20% risk, given that we've closed our 80% on the first lot. So that's my trading update. Many of you were asking about that, about what I do and I do it. So I'm going to do that every night. So get on our Discord group, guy. I put it in here, guys, under trading strategies. So join us here. If I don't, it's not every night. I'm doing this manually, so I'm not always around. But most nights there'll be something triggering, 1 or 2 trades, 3 or 4 trades, or whatever. But some nights there's not. I'll put if there's nothing. And these are on an end of day basis. Okay, on my strategy, which is over on my other workstation over here, a trend following type strategy there. So watch our Discord group. So it's gone. Let's see the can here. Let's go back to the majors. I don't know. In response to the news, 2-minute time frame. We were long, weren't we? So it's reversed since we last looked, but we're then back up again yet. So yeah, trending to the upside. So our pending order would have been down here at 144.15. It was filled quite nicely. Thanks very much. And even our 2-minute after the 2 minutes of the first 2-minute candle was positive, so we'd have bought here as well at 144.35, and it's gone up. And stop loss would have been down round about here. At the close of the candle, so we're still long on that one, and that's still nicely in the money. Again, stop loss now probably still here. That was a bit actually no, it would have been pulled up here, so we're still long dollar CAD. Thanks very much, and we're in the money on that. If you've got to trade that news item, which was the Canadian inflation data coming in a bit weaker than expected. For everyone, I'm seeing if there's any comments from anybody, but they're not. No, obviously the bigger thing since moving markets is the Trump administration, and day 2, as I say, it's just getting underway. If I just bring in how Reuters are reporting this currently, I just open that global Reuters tab there. Morning bid, stop go, Trump tariff trades, whiplash and all. We've just seen that, haven't we? So there we go. That's what we've just been talking about. Nothing about day 2. Funds start Trump 2 era, the most bullish on dollar since 2016. That's what we were dollar long anyway, were we? Dollar rally cools as Trump makes no new mention of crypto. Recently, dollar rebound sharply, futures rise as Trump 2 jolts the market. We saw that volatility. So just be careful, guys, and that's what your stop loss is all about. Remember, your stop loss is there to protect you from these whipsaws, this sudden volatility. Many people don't trade even today without a stop loss. I mean, if we just go back to if we go up to the 10-minute chart, and it could have been some serious panic and some positions being closed out completely, accounts blown on that sort of energy. Somebody could have been selling it down here, having trying to be long here and trying to get, and then got whipsawed again to the upside, as he's made some comment about talking about the 1st of February for tariffs on Canada and Mexico. The Mexican peso has also been all over the place, obviously, with these talks, but that's the Canadian loonie, bigger, more significant currency, and still getting whipsawed around. So obviously be careful trading that way. So I'll just leave as I normally do with our platform. Remember, guys, it's all about testing yourself. It's all about the evaluation. It says 2-step or a 1-phase. 2-step is a fairly traditional way of doing it. You've got higher with the Express. You've got higher targets. Is a 12% one-off target. The 2-step gives you 10, 5, and 10. Or 10 and 5, sorry, I should say. 10 in the first phase, 5% in the second phase. You get more exposure to the market. Investments start, you can have a little $5,000 account from $55. Our coupon code is still available. Thank you 15, that's still working. So thank you 15 takes 15%. So if you've literally only got $50 to get yourself in the market, you can, and it gives you the ability to trade with a $5,000 account. For me, if you want to take these trades, I'm bringing up these wider ones with some with the wider spreads, with more trades open at once. Look for a $50,000 or a $25,000 account. I mean, the $50,000 account is $350. $25,000 account, a bit more affordable, $175. You still get 15% off that at the moment. So give it a go. You got nothing to lose other than a couple of $100, but you get real experience in the markets. Obviously, these are evaluation accounts. It's not live cash, but do what you can. And we're here to help you. I will do what I can to help you. So as I say, do go to our social media platforms. Look at the interviews we did yesterday, or we did before Christmas, just after Christmas. Francis, the guy I was speaking to on the first interview, he uses the 4-hour time frame. He trades on the 15-minute time frame. He evaluates his markets on the 4-hour time frame, but he just sticks to gold, one asset, but he has sometimes 2, 3, 4, up to 5, he told me, trades sometimes. But the big thing he's learned is basically discipline and control and patience, not getting greedy, all the soft skills that we've got to work on every day as human beings, rather than the technical skills of looking at markets and understanding the economics and numbers on spreadsheets and things. So they're the key things that keep you in the market. But anyway, that's enough from me for today. I've gone on for too long as usual. It's 2 o'clock here. I need to go and get some lunch. So have a great rest of the day. I will see you all again tomorrow. Tomorrow brings I can't remember actually what do we have tomorrow. Let's have a look. If I go to what's on the I should have it on my diary here. Wednesday, I think it's no activity Wednesday. I've got nothing in the 22nd. So a quick check whilst we're all here in the calendar for Wednesday. Yeah, it's not big three bulls. So there's PPIs from Canada following today's CPI. Earlier in the day, we got some borrowing out of the UK. It's a bit of a flat day. GDP from South Korea later on. So it's quite a quiet day tomorrow. I'm not actually sure what I've got scheduled for tomorrow, but I will be with you tomorrow, Wednesday, 22nd. So see you then. Take care and all the very best. Bye-bye.